everyone and welcome back to ICT Simplified. Today we'll cover the ICT mitigation block. I'll teach you what creates them, how to identify them, and how to use them in your trading. So the first thing we'll cover is what creates them. So let's use our bullish and bearish diagrams for example. The first step, what you want to look for and what creates a bearish mitigation block in an uptrend is price being unable to create a new higher high after making a higher low, which would look something like this. What creates a bullish mitigation block in a downtrend is price being unable to create a new lower low after making a lower high, which would look something like this. Once price has created a structure, the next thing you want to look for is a market structure shift. If we're looking for a bullish mitigation block, the market structure shift would be right here, as marked up right here. For a bearish mitigation block, the market structure shift would be right here. So now that we have reached a higher time frame point of interest, followed by an inability to create new higher highs and lower lows, followed by a market structure shift, where is our mitigation block? A bearish mitigation block resides in the last down close candle which formed in this price swing, and a bullish mitigation block resides in the last up close candle which formed in this price swing. So as you can see, I've marked up the mitigation block here. It's the last up close candle, and here it's the last down close candle. So let's mark them up here as well. An easy way to identify mitigation blocks is to look for either a M or a W formation on the chart after reaching a higher time frame point of interest. This is often referred to by retail trading concepts as support broken turned resistance, or resistance broken turned support. So now that we have learned what creates and how to identify a mitigation block, let's go over some examples on the chart. For our first example, we will look into Euro USD on the 1 hour time frame, and what we will be looking for here is a bearish mitigation block. So as you can see, we have a higher high, a higher low, followed by a higher high. What we need to do now is create another higher low, followed by a lower high and a lower low, which will make a market structure break, giving us a mitigation block somewhere around here. So let's see what happens. So as you can see, we have now created a higher low right here. So hopefully this will be a lower high, followed by a lower low, which would mean that this candle right here would be our bearish mitigation block. So as you can see, we have now gotten a market structure shift, showing that price wants to go lower, and we have now got a valid mitigation block right here. So let's mark that one up. So now that we have gotten a market structure shift and a valid mitigation block, let's enter a sell order right here and see what happens. So as you can see, this trade was a success. We had a higher high, higher low, higher high, higher low, a lower high, and a lower low, creating a mitigation block right at this candle here, and a nice retracement to the mitigation block a few hours later, which resulted in a nice 1 to 3.28 hour trade. For our second example, we'll go over a bullish setup on Euro USD, this time on the 5-minute time frame. So as you can see here, we have a lower low, a lower high, a lower low, and a lower high, followed by a higher low and a higher high. This means that we have a market structure shift. You can either put it on this wick or on this one. This one felt the best because it was the one that took out the sell stops resetting below this low. So we have a market structure shift and a failure to create new lower lows, which would mean that this candle right here is our mitigation block. So let's see what happens. So as you can see, we got tagged in and price always closed within the mitigation block candle, which made it a good trade of a 1 to 2R. So just to recap this trade, as you can see, we have a lower low, a lower high, and a lower low, a lower high, and a higher low, and a higher high. A market structure break right here, and the mitigation block is the last green candle within this upswing, which worked out perfectly fine. For our third and final example, we'll go over a bearish setup on EUR/USD 5-minute time frame. So as you can see, we got a really similar setup to the first one that we had. We have a higher high, a higher low, a higher high, higher low, lower high, and lower low, which would mean that we have a market structure shift right here, which would mean that this is also our mitigation block. Since we have a close below, we'll now enter a sell limit right here and see what happens. So as you can see, we got tagged into the trade right here. It went down, came back up, and down to take profit, which resulted in a nice 1 to 1.52R trade. So now that we have covered breaker blocks, order blocks, and mitigation blocks, we still got rejection blocks and propulsion blocks to cover, and I will upload them on my channel very soon. But if you haven't watched any of my other videos, please watch them as well. It's a really simplified teaching of the ICT order block and the breaker block. So if you're interested in learning those, please check them out. I'll leave them right here so you can see them. But until next time, have a good one.